Hey guys, how's everybody doing? Hopefully people show up this time. I just did a live stream and no one was there. I had 0 people there for like a half hour. I wish you guys could see it. I already erased it. I should have kept it up there because I was starting to get pissed. I kept checking back. It kept saying 0, 0, and then I looked around to see if anyone else was having a live stream. I thought maybe there's somebody else on the internet having a live stream, because as soon as I do any live stream, there's, as soon as I sign on, within a couple of minutes, there's 4 or 5 of you guys here. See, there's James right now. I told you. But I just did a live stream for 30 minutes, and it kept saying 0 up here in this corner where there's a number of people. Well, now James is here, and it still says 0. Now, okay, it says 3. Anyway, so that's probably Marcus and Mark. Anyway, how are you guys doing? Thanks for being here. It could be Dan also. It could be SB also. So anyway, I appreciate you guys. But yeah, I just did a half-hour live stream by myself. And so I finally said, well, I was thinking maybe I was getting shadow banned because I'm conservative, or big Wall Street is shadow banning me because I'm talking about these disruptive funds, So anyway, so I just shut the stream off and I went and checked, and I'd set it to private by mistake because I was like, this got to be something wrong. I've never done it. Even when I had 500 subs, as soon as I do a live stream, I'd have 2 or 3 of you guys there. When I had 1,000 subs, as soon as I do a live stream, I had 10 of you guys here. So whatever. All right, I'm ready to go, Carl. Let's go. Let's go. All right, so we're going to start with, I've already said all this stuff once, but that's fine. You guys haven't heard it once. So let's start with the market. The market's really impressive. I mean, what I was really impressed with was we talked about some good stuff in the last live stream. I hope I remember to bring it up again. I mean, there was just none of you guys here. I made some great points. All right, so here's the NASDAQ's up more than a point today. It's up 1.1. SPY, and it's at all-time highs and closed on the high of the day, which is great. SPY, on the other hand, also closed on the high of the day, probably close to an all-time high, but it was only up. It wasn't up as much on a percentage basis. But the thing that's most impressive about today is, well, a couple things. Look at AMD. It was up another 11% today. That's insane. That's absolutely insane. And look, here's the thing that's even more insane. AMDY was up 9% when the underline's up 11. That's not supposed to happen. I mean, I say this every time this subject comes up, but people always say these covered call funds don't get upside. Well, they never met Yield Max. The Yield Max covered call funds do get upside. Now, they don't get a lot of upside. They don't get as much upside as the parent asset, but my gosh, they get upside. All right, so great job, AMD. All right, so let's go over here to the crypto quartet and see what's going on over here. Well, I guess let's check it out this way first. First of all, let's check out blocks, BLOX. Yeah, I was even asking a trivia question, but there was no one here. I'll ask you guys a trivia question. We'll ask it in a second. Look at that. Blocks is closing on all-time highs. I mean, that's just freaking wonderful. Why didn't I buy this when it was $20 a share? What the heck was I? I mean, I told you guys to buy it, right? I wasn't shy about liking it. It wasn't like, oh, I don't like this one. This one's going to suck. No, I was like, oh my gosh, this one's going to be the best one ever. I need to get some of this. It's ridiculous I didn't buy some during the pullback in August. What was I freaking thinking? Oh my gosh. Anyway, okay. Well, enough about me. So that's blocks. Let's check out LFGY, and then we're going to go check out the actual stocks in the portfolios. LFGY looks good too. It's not quite on all-time highs like blocks is, but it's killing it. Let's look at all blah, blah, blah. Let's look at Alti. Alti closing at all-time highs. Close. Looks good. And let's look at poor old Salty. Well, Salty sucks. Salty's nothing but erosion. I'm just joking. It's not Salty's fault. The asset that it's selling calls on, or in this case, it's selling covered puts because it's an inverse fund, but the asset that it's selling puts on refuses to go down. The price only goes up. That's what Salty's supposed to do. All right, so let's do this. Let's look at the crypto quartet now. And let's start with the one we're on. Speaking of Salty, we'll just get it out of the way. So there's Salty. We just saw that it was down a little bit. So there it is, down 62 basis points. We can see why. Or we can see what hurt it and what helped it. The Tempest AI short really hurt us because they were short Tempest and it was up 11%. However, they got a couple of them right. I mean, they were short bit deer and they were short Bitmine immersion, I think, right? And it was down earlier. Oh my God, it rallied. Well, Bitmine immersion was down more earlier. It came in and rallied by the end of the day. Anyway, all right. So that's salty. Let's go look at LFGY. This thing's impressive. Well, that's salty. We'll just look at Alti since we're here. Okay, so this is Alti. They have a lot of cash. It's not really truly cash because it's a long story. We'll talk about the synthetic book in a little bit. They don't really have 20% dry powder. But they have some dry powder though. All right, we'll get into the synthetic book in a second. I mean, this is impressive. I mean, other than open being down and a few others, I mean, this is great. Now, unfortunately, they didn't get as much upside as blocks because they're running covered calls, which is a caller strategy, and they're capped. In fact, they aren't even running call spreads. They're totally capped. The Alti's the most capped of these funds. Now, I get that they can roll out, that they don't, but on a, anyway, and it's still a great fund, and it is still a great fund. But anyway, so it was only up 91 basis points. That's not too bad. I mean, the NASDAQ was up 1.1, so they got about 80% of the upside. Let's check out LFGY. Now, LFGY does cover call spreads. They get more upside than Alti, sure enough. Other things being equal, they should usually do better than Alti on the upside, and the block should do better than both of them on the upside. Other things being equal, if all funds held the same stocks, which they don't, but they're close. So, all right, well, great job, LFGY. I really like to see that. I really wish I wouldn't have sold all my LFGY, but I guess I'm fine though, because I bought blocks, Alti, and QLDY. And so actually I did the right thing so far. It's looking like. All right, so let's look at, okay, so Alti. Alti has a synthetic book also. None of these other ones have a synthetic book, where sometimes they actually use stock and they do a caller trade with stock, and then sometimes they do a synthetic caller trade with just options. Well, that right here they have a synthetic caller trade on 4 positions, and it is, where is it? Synthetic book. And they just had a new one today in this one down here, CNC, which is Centene. They did a 25,000 lot put spread. May not look at it, but it may not look like it, but that's, well, let's look. Let's see how much that's worth. So think about that. Look at this. They sold this put. See that? The minus in front of 25,000. Doesn't matter which put they bought, for the sake of figuring out how much notional money they have tied up. So they're trying to sell something, or well, when you sell a put, it's an offer to buy the stock. So they're going to have to buy something that costs the strike price, right? It's a 39 strike put. So all you have to know is equals, we'll multiply 25,000 times 39, and then multiply that by 100. Any of you guys know what that is? I'd say 110 million. 97 and a half. My estimate is not. I didn't really estimate it. I knew what the other ones were, so I just picked a number that was in the same range. All right. Well, anyway, and I put it in the wrong spot. It's supposed to go over here. But anyway, you guys get the idea. So see this 354 million? This is cash that is in a money market, but they have to keep it in the money market or else they're over leveraged. Even though they really don't have shares in Centene or in Tesla and Palo Alto and Lulu, even though they don't really have shares, they save the amount of money out of the fund as if they have shares, and they invest that money in T-bills. So you actually get a little extra money. I'm in love with this way of doing it. They ought to do the whole fund like this. Anyway, all right. So that's enough for Alti. That's enough for synthetic book. I didn't have time to do it yet, but Tesla's no longer in the synthetic book. I need to move Centene up and Tesla out and re-add it up. Anyway, all right. So let's look Alti. Let's see blocks. Now we already checked blocks, didn't we? Blocks was the first one we checked. Yeah, blocks is impressive. Okay, very good. So now let's go to, we can look at max factor stuff. We can look at, let's do this. Let's do index buffer report. Sometimes I see something on the index buffer that I missed elsewhere. Gosh darn it. Where's the index buffer page. No, it's not that. Oh yeah, it is this. That AMD, I mean, that's like I always, that just didn't used to happen. You can't do covered calls and get 90% of the upside when something's up, especially when something's up multiple percents, like 12%. I mean, that's just insane that people just don't realize how special that is. That wasn't even possible a year ago. It wasn't even possible before we all bitched, mainly the people on my channel, but other people too, before we all bitched about no upside, and then Jay uncapped the upside. So it's just like they would, if you heard the spaces today, Mike Venuto admitted they do stuff because they listen to the people. That's the reason they went to weekly, because they were forced to, basically. He didn't say it like that. The reason they uncapped the upside is because we forced them to. That's something that I was big behind, and other people were too. I'm not the only one, but I would say I was probably the loudest voice in the uncap the upside party. Anyway, let's see what's going on. Look at this YSPY. Look at that. Now, YSPY has totally capped upside because they're running a put spread, which is a caller. So they, but it doesn't seem to hurt them. I mean, because they do it every day, and but yeah, you don't have to. Uncapped upside isn't the only answer to the problem, but it's one of the answers, right? SVOL looks really good today too. Nothing in Spyland was even down. Oh, that's good. ZVOL and Salty were down. We'd expect that. And Q up was up. We like to see that. This is the one that spends 10% of the fund's money every day on an at the money call option in the Qs. And you saw what happened today. The Qs were up 1%. And how much were the call options up? 4.3%. That's convexity. When you have asymmetric, or you have that's the tailwind at your back, you're making more than you're risking. That is a convex fund. Q up is a good fund. I wish I would have come up with that idea. Sounded like a stupid idea when I first read the prospectus, but it's been working out great. It's been killing it. It's up like 50% this year. Anyway, it doesn't pay a yield though. Blocks and GPTY are killing it. I still have a lot of GPTY too. Also, I guess I have exposure to AMD in GPTY. YMAX looks good because of AMD. XOVR looks good. All right, so that's that. Let's look at the yield max buffer report. This is that AMD that's just a miracle. That just didn't used to happen. Like I say, a year and a half ago when these funds first came out, something like this happened, AMD would have been up 1.5% maybe, or AMD would have been. I wish I could brag. I wish I could say that I was the one that figured out the solution. That was Jay. I didn't tell him what to do, but the uncapped upside is no bueno, or the capped upside is no bueno. In fact, I was telling him to sell put spreads, which wouldn't have really solved the problem. It would just been a synthetic caller. But I didn't know any better. But I was anyway. But instead of selling put spreads, he sold a call spread at the same time he owned stock. Fixes the problem. All right, so that's it for that. What do you guys want to look at? I'll stop filibustering. Let me ask hey, Retire, what's up? Let me ask my trivia question, since there's a lot of you guys here. What was the SPY? We'll look at this. Okay, the SPY today. The SPY's price today was $6.73. All right. What was the SPY's price in 2008 at the lows? What do you guys think? Put it. Don't look it up. That's no fun to look it up. I remember what it was, but I'll go look it up to verify. But put it in the comments. But what was the low? And the answer, according to this, it was lower than I thought. It was 48. I don't remember that. March 3rd, 2009. I remember it pulling back to 66, but I guess it got lower than that. This is because dividends are on. and the dividends are on, messes up the price of the stock. For historic purpose, look at that. That's exactly what it was. All right. Well, that tells you how much dividends the SPY's paid since then. The SPY's paid 20 cents worth, right? Because you could see the adjustment. The real price was 66 cents or 67 cents. Let's see. Yeah, the low was 67.73. But I think one day it hit, because people are making a big deal about the SPX, which is 10 times as big, being at 666. But the SPY hit 67 that day. So think about that. What's 10 times 67? $670. So so think about that. So anyone that's been working since 2008 and just donating to their, contributing to their 401k, and they're in their little 60% growth target date fund or whatever, the growth part of that fund, or let's just say they have SPY, 60% SPY, that part of the portfolio should be up 10x. That's amazing. And that SPY, can you imagine what NASDAQ's up over the same time? Anyway. All right, let's see if any of you guys got the question. I didn't look for the question before I spoiled the answer. But anyway, I bet some of you guys knew that. I'm getting nervous too. I'm with you on that. I'm getting nervous about that. We'll talk about that in a second. All right. Happy hump day, all. There's retired. Thank you. ZZW. Okay. Q up strategy is pretty interesting. Yeah, you could do it. With my own money, I might use 5%, because if you use 10% and you lose 10% and you lose, I think you lose 10 days in a row, you're down like 60 or 70%. And I'm perfectly capable of losing 10 days in a row, or the market's perfectly capable of going down 10 days in a row. But I don't know. Now that you think about that, even when the market's down 10 days in a row, or, it might have one or two face ripping up, even in a bad market. The market will have one or two face ripping up days, and you're buying a net the money call. It's 0 DT call. So you monetize it every day. So even in a big down move, if you got any kind of vicious bounce back at all, that also cushions the sides. But anyway, yeah, it's an interesting strategy. I just like that. But what I do like about it is if you get hot, the market's going up and up and up, and then down one day, and then up the next 3, and then down 2 days, and then up the next 5. If you get into a trend of more up than more downs, your pile of money will grow, and your 10% every day will be more dollars, dollars. Let's see if that's somebody saying I'm doing something wrong on here. Or sometimes you guys text me during the show. Anyway, okay. But yeah, ZZW, it is interesting. And I just did a live stream that no one was at, because I set it to private, and I was talking about you, not live stream. No one heard. Well, I was addressing I was talking about the back and forth we were having earlier in the day. And anyway, all right, we can talk about that maybe later. What are your thoughts on dripping KLDY, and what would the rate be? Okay, just on my tracking, I'm the only one that's tracking this right now. I come up with 35 to 40%. So, I'm saying the rate's going to be 35 to 40. The average right now is 35, but what they've been paying, it's coming out to about 39. So yeah, I think anything's all right on drip. I think anything's all right on drip. The thing that gets me about it though is I'm not a real big fan on using these for growth. And if you're just 100% on drip, you've essentially using these for growth. But I've had to kind of reconcile that with myself, because I'm on 100% drip right now. You can always take them off drip. Okay. But also the reason I used to think that is because it used to be a given that covered call funds do not beat the parent. Nowadays, that's no longer a given, especially with things like blocks and QLDY. And other ones out there, and Alti and stuff. There's ones out there just routinely spanking the parents on a daily, day in and day out basis. So I think that in a bull market, that's no longer just a given that an income investment is going to be behind. So maybe it's just no longer a given that it's dumb just to get income investments and drip 100%. But I generally think these are better for older people that need some money. I think the perfect use case though is somebody that has these, but they also have some growth investments, and they drip, say that fund's paying 40%, and they take 10% of that to live off of and drip the other 30%. I think that makes a good use case, because it's a little of both. You give yourself some money to live off of. If you had $1 million and you put 100,000 in QLDY, it's 10,000. It's not very much money. Anyway, I don't know. You need more than $1 million to live off of anymore. In retirement. So I guess. Anyway, but yeah, it's, I think on drip, I think the worst thing to do is get these things and just go spend all the money on non-assets. A lot of people are taking these and buying other stocks. That's fine. But if you're taking, I always use the example, if you're taking these and then getting a boob job for your girlfriend, well, that's fine. It may give you pleasure or whatever, but she may not be your girlfriend in a year. It's not an asset. But if you're taking these and buying the SPY, maybe you even buy the SPY with your, I don't know, if you're taking these and maybe using it to pay the mortgage down on your rent house. Great idea. I'm just saying, keep the investment going. That's my main thing. Yeah, you like how fast it would grow. I'm with you. I'm with you. Yeah, and it will grow as long as the bull market stays here. Alti's definitely built for bull. All of these are. So as long as the bull market stays here, it's going to outgrow it appears that it's going to outgrow the indexes. Yeah. So it's doing well. You can always switch it later or whatever. Okay, Marcus, everyone's talking about Eggy. Yeah, I was too early, and I never was that big of I never was that big into it. I read the prospectus and it didn't seem like anything that special, but also I said, we'll do a follow-up, and we never did follow up. But I got some feedback from you guys, and my feedback was they need new branding. Those are terrible tickers, bad looking prospectus. It's just kind of a weird, but it's a different target audience. Their target audience is Latin America. And so they're doing fine there. But anyway, who cares about all that branding, all that look stuff? They've been doing great. So yeah, I missed the boat on that one. Because I should have been more excited about that. Just like I missed the boat on Round Hill. I didn't realize how good Round Hill was when they first came out. I didn't realize that, anyway. But I did find it just because it was because I met the guy. That's why they invite you to these things. Yeah, it's nice for them to pay for your room and everything too. But once they get us influencers in the ecosystem, and then we meet other, it's because I met a really nice guy that was the owner of the fund. I wish I would have got to go this year. There's no telling who I didn't get to meet this year. Anyway, but yeah, I'm doing good. Z. Yeah, I'm doing very good. Very well. Very well. Are we going to talk about, do you guys want to talk about, I don't know that much about it. They went to Tuesday and Wednesday, right? Somebody put it in the comments, tell me what they're doing. I listened to the live stream today at noon. Hopefully you guys did too at 11 my time. They're going to, everything's going to pay either Tuesday or Wednesday. The only thing that's going to kind of be screwy is this first pay period. You're going to get some that have had a month's worth of earnings. The pay amounts are going to be irregular, because trying to get everyone on the same schedule when some of them haven't had any earnings yet, and some of them have had like 3 weeks worth of earnings built up, and they're going to have to pay out. In other words, here's my warning. Some of these might pay a large dividend. Don't get excited, because it's probably just a one-time dividend given the way that the weeks are being split up. That was kind of the news. So that's basically the only thing I know. I think it's Tuesday and Wednesday is deck day, and then maybe payday's the next day. Payday's Thursday. I don't know. I know you. I just figure you guys will cover that kind of stuff. Okay. Are you the only one getting nervous about gold and silver being so high? That's not a good sign. Plus, I have no idea. Yeah, no, I'm nervous about it too. Who says? Who says you have to cash out? One of my favorite money managers, it's a guy from Austin. He has all kinds of stuff on the internet. His name is Chris something. I'm just trying to blank on his last name. He had a hedge fund called Artemis Capital. His hedge fund shut down last year, probably because he can't compete with all these damn ETFs. But he's a good guy. He didn't shut down for bad reasons. He's super, super intellectual. super smart volatility guy. Anyway, he believes keeping 20% gold, but a lot of planners will tell you 2%, 5%. So anyway, right now, if you have like 100% gold, yeah, maybe you want to cut it back to a reasonable amount because you have had a lot of profit. It's gone up. But if you're at 5 or 10%, that's probably a decent allocation to be at anyway, right? I mean, that's why it's good to have a planner, because I don't know those things. I used to know these things in the 90s. People used to come to me all the time with this type of stuff. I used to know all about bonds and gold and everything, but I've forgotten everything I ever learned about money management other than the option part. I never really was interested in the other stuff. I was just there for the options. But my firm made me learn the other stuff. And the biggest commission I ever got was selling $1 million worth of bonds to somebody worth of 30 years. I sold $1 million worth of bonds in one ticket. It's the biggest single ticket I ever had. It was a long time ago, and I wasn't a very big time broker. I mean, that commission was wonderful. I did $1 million worth of stock also, but there wasn't as big on one trade for somebody. Wasn't as big of a commission for stock as there was for bonds. What option strategies BITK use? Good freaking point. I don't know. Let's go. I thought we were going to. I thought I wanted to look into that, and I don't know. Maybe I got sidetracked. We were talking about that yesterday. BITK prospectus, total capital. Okay, so according to the prospectus, they're doing ODTs, zeros on IBIT. Well, IBIT only has one expiration a week, so they're doing some synthetically. They can create them with flex options, and they can also you can do a multi-day option, and then just cover it the next day. You could sell an option Tuesday that expires Friday, cover it Wednesday with whatever decay it had, and realize that. I mean, they can break it off in smaller chunks and synthetically kind of do daily options. But I think that must mean also probably daily options are coming in the IBIT. But their investment objective is current income. So even though it has had a lot of capital appreciation, they aren't going for capital appreciation. They'll take it if they get it. That's important to know. All right, let's see what the heck they're doing. I thought I looked at this once. It won't take me just a second. Selling call options. Unlike a traditional cover call strategy, the fund will generally not own the security directly because they're smart. It says, although it may, because they're smart. Pros use synthetics, and the fund will derive its synthetic long exposure to the price return of the underlying security through the use of option contracts, longer maturity days. So they're doing synthetic cover calls. In executing the synthetic cover call strategy, the fund will on every business day sell a zero DTE, which there isn't really a zero DTE. You can sell a zero DTE on Friday morning, but you can't sell one on Thursday morning or Wednesday morning or Tuesday morning. Anyway, and they do address that though. They say currently the zero DTE zeros aren't available yet, except on Fridays. They said what I just said. But then it says the fund will continue the spread. So they're going to use flex options, and they're going to sell anyway. They're going to do other things, just like I said. Okay. Well, so my question is though, how in the heck are they making so much? I wonder if they're overpaying, because they are just making way more than other funds that are doing the same thing are making. I wonder if they're using leverage, if they're overpaying. I didn't see anything about leverage in there. One thing, it's brand new. Is it really that new? Well, yeah, it is new. I thought I saw the other day that it was up like, well, I mean, being up 10% in a month. Somebody showed an annualized number and it was triple digits. But yeah, I guess you could also just buy IBIT if you don't need the income and you're up just about as much, almost as much. But I'll keep an eye on that one. I don't know what they're doing, but we'll try to, I guess I'll have to download their trades. So maybe what it is, it's the dividend that's so high. That's what it is. Look at this. They paid maybe they're overpaying. They paid $1.50. I'm going to assume these are monthly. So let's $1.50 times 12 is $18. Well, this freaking thing just cost $25. So it's going to be what, 60%, something, 70%, something like that. Because I saw somebody, I don't know, I think there's some bad information out there. I saw people saying it was paying triple digits, and I don't know. Tell me what you guys know about that. A synthetic, but to answer the question, the option strategy, synthetic covered calls. So same thing Max is doing. All right. So let's see. Let me try to go through these really fast. Are we going to talk about Yom? Okay. So I did talk about that a little bit. No, you aren't getting nervous. If you're 100% in gold, I would say yes. It's time to take some profit. But if you're 2, 3, 5, 10%, that's the talk to your planner, but that's probably smart. All right. Yeah, you won't use 10% of your own money to try to buy. Yeah, okay. Well, no, I'm with you on that. Do that. That would be a good strategy. So buy one call every trading day for a week and see how that works out. That's a great strategy. If you have a bullish week, because it takes your opinion out of it. You don't worry about what the market's doing. Because you say you're harvesting that money. You're just buying at the money call. Yeah, it's expensive. The market goes up at all, you're going to bank. And if it goes up 2%, you might bank a lot. And if you get 2% up days, or you get a 1% up day and a 2% up day in 1 week, even if the other days are small down days, you're going to make bank, All right. So Z, you went into CAIE for lack of a better idea. Well, Marcus claims CAIE is a good idea. I don't know. So synthetic covered calls, the answer to that question. It's around 170 per call. I wonder what question I was asking. I need to look at the questions in real time, look at the answers in real time. But anyway, Durzo, they have synthetics and they do covered calls on. Yeah. Okay. Good answer, Dividend Degenerate. I have a video on it at 7. Okay. I'll check out that video. Put the link to your channel in here, link to your video in here. I'll go check it out. I support people that support my channel. I go watch every video that I watch, or not just people that support my channel, but I watch people that I'm friendly with. I watch, who's that Canadian guy? What's his name? Health and Wealth. I like him. I watch, of course I watch Rod, but I watch all of them. Yeah. Put the link up there. Okay. I miswrote regarding QLDY. How much would the compound rate? Oh, if it's last week. Okay. Yeah. I don't know. Not an expert on compound. In fact, I always thought that was kind of BS. I realize compounding is the 8th wonder of the world, but the fact of paying weekly to paying monthly, I did the math on it once. It's less than 1%. I think there's cope in there. And if you guys, I'm not trying to, people just want it weekly just because, I think. And then the reason that's always given is, well, because I can compound it faster. I looked into the number. It's not really that big a difference. I will say this, though. And I said this on the morning show, it does cut down on path dependency a lot. So, I think that's a better argument than the compounding argument. But anyway, whatever. I'm not trying to diss compounding. So let's just say this, whatever it is, it pays twice a week instead of once a week. I don't know if the compounding will be twice as much, but it'll be some amount more. So if you're happy with the weekly compounding, the bi-weekly or the twice a weekly compounding ought to even be better, but I don't have a number in my head. I know it was less than 1% when you go from monthly to weekly. Or one day when I figured it out, it was. But anyway, okay. You've been adding to your ICOI lately. So that's based on Coinbase, right? But waiting for the BITK declaration tomorrow. Yeah. Well, I'll be anxious to see what they pay tomorrow. And let's try to get an idea on what their rate they're going to pay. I need to do some content on also. I'll watch your content tonight. But then I'm going to, I guess after their payment tomorrow, maybe I'll cover their payment. All right. So BITK, Brad's here. How are you doing, Brad? Always good to see Brad. Tuesday, Wednesday declaration, pay Thursday, Friday. So actually I said that right, I think, by mistake somehow. Do we know? Yeah, they explained that. Go listen to the Wolf Spaces. That was beyond. I heard them talking about that. Mike Venuto went into detail about it's more complex to do what we want him to do than we realize. And he explained some of the ins and outs and why that is. And I don't remember the exact answer, but they talked about that extensively. They also said that people that have European MISTI European Misty's not going weekly, and people are mad about that. But people in Europe are mad about that. But it has to do with the regulations and the exchanges. You know, Europe's like, I mean, you know, anyway. All right. Title Trust, rights, SEC Vista. Oh, what's that? Files SEC Div Boost ETS. Okay. So that's probably leverage. I bet there's some kind of leverage ETF. Let's go look at that. Let me just, Div Boost ETFs. I haven't heard of that one yet. I'm really sold on these Granite shares. I wasn't at first, but I mean, they're doing really well. Anyway, let me know about that deal. So it's Granite was the other clue, though, right? Granite has some good stuff. I need to do a review on the Druckenmiller Fund and the the Bill Ackman Fund. I mean, I haven't done. That's something else I want to do a review on, is the ones where they're just copy trading famous investors. All right. Well, I don't see it. It's just pulling up stuff for things that are already out. I mean, I know you're right. I was just going to try to look at it really fast. Put more information in the comments, and I'll keep going through the comments. All right. So there's Brad. No idea, Brad. We can't wait to see it. I'm surprised Max didn't split the groups. Yeah. Monday through Friday would have been a good move. Maybe it was too much admin work. If you're really interested in that stuff, I mean, Mike Venuto gave a master's class for about 10 minutes on exactly how it's going to work and what they have to do. And it was right at the start of that Wolf Spaces. It was probably from 9:05 to 9:10, 9:15, something. All right, so you guys are just talking to yourself. This is the file. What does that mean? This is the file. Yeah, almost 300% annually. That's ridiculous. What is going on with that? So that's that BITK. Well, that's not realistic. You can't do that. I mean, or can you? Let's go look at IBIT's options. See if we can do it. 300% per annum. You just think what that's going to do to the NAV. You guys understand how NAV works and what erosion really is. So, all right. I didn't even look what I was up. I was up more than 11% the other day, or from December 1st or December 11th, where I started, and I was down 20%. So going up 31% was awesome since April, but it's all due to GPTY and LFGY. Those things were monsters, and I added at the low. So I guess Alti contributed too. Look at GPTY up 2% today, GDXY up 2%, WPay up 2.5%. What a freaking beast. Misty. I have a few shares of Misty. YMAX up 1.6. This is just a dream day, all-time highs. Everything's up multiple percents. It won't always be like this, but let's enjoy it while it's here. Okay, so let's go look at let's go look if we wanted to. Let's see how much I think we could make if we were to do an option trade in IBIT. So first of all, they're using, where is my darn thing where I freaking search bar? What is going on? There it is. But yeah, 300% is ridiculous. So, I mean, 300% is ridiculous. So just look at the IV for this week is 46. For next week, it's 48. Next week, the highest it gets, you go out, a year, it may hit 62. So I don't know how they do that. I mean, you could do it. I mean, you could buy the stock and you could sell an at the money option for $1.50 every week, and the stock only, I mean, it's good money. You're going to make about 50% yield, but I don't see how they're getting the 300. We'll keep an eye on that. I'm going to watch your show. Maybe I forget the name of the guy that has that's coming on with the show. Dividends Jared. I'll watch your show, and hopefully you have it figured out, because I obviously have no idea. I want you to tell me how the heck they're doing that. It'll work until it doesn't, just like all of it. Reserve split quarterly. This is the file. I don't see anything. Speaking of Europe, I would highly recommend everyone invest in whatever that has euro exposure, because the U.S. dollar is declining fast. Yeah, it's certainly benefited a lot of the stocks we look at. There was one point in time they were going to come out with a European covered call fund, or a emerging market covered call fund. Defiance filed for it, but never did release it. Anyway, all right. So what else do we need to look at? What else should we look at? What else do I want to talk about? This is going so much better than my first live stream. I should have left it up so you guys could have seen it. Here's what I'm excited about. Let's go look at this. And somebody asked this question earlier today. They said, what will the ticker be for or somebody said, I'm looking forward for the S&P based. Is it S&P? Well, no, somebody said they're looking forward to the S&P based lightning spread. And they said, what's the ticker going to be? And I actually don't know. I was getting confused with another question. What I'm really excited about, though, is the leveraged plus income that Defiance is doing. Sylvia Specialty is leveraged. She learned a direction. That's what they do. And she was there right during their prime growth time. As you guys know, I don't care about single stocks, but they're coming out. But they have one on Ethereum. If I had to buy any of these, I'd get the Ethereum one, 85% rate. But what I'm trying to show you guys is this. The really exciting news. This is what's really exciting. And the triple QI and SPXI, leverage long plus income. I really don't know how they're going to, the lightning spread is basically leveraged. It's local leverage, tactical leverage, synthetic leverage, not really synthetic. Partial leverage, maybe. It looks to me like the lightning spread and triple Q and double QI, or I don't know. I don't know how they're going to differentiate these two, but I'll certainly be happy to compare them. We'll look at the option strategy, see how they're doing it. What they've told us they're going to do on here is they're going to double leverage. So they're leveraged their long part of their book to 200%, but then they're selling covered calls on the entire portfolio. It according to my research and according to kind of what they're trying to imply, it's the covered call, or not, I should say what they're trying to imply. Selling the calls on the whole portfolio should, and it's according to my testing too, should try to make it where they get a lot of upside. I think they're trying to basically get full upside. And I think that's the plan. I think in an up market in perfect conditions, they can do that with the double leverage, but the full covered call. We'll see. Rex has been having a good luck with doing the half covered calls and a little bit of leverage. Okay, ZZW is saying, yeah, it's you. Defiance, lightning spread, QLDY. Oh, that's it. SSOY, Soy Boy. We'll call that the Soy Boy Fund, or that's the Russell. Or SSOY. Oh, no, then the Russell is IJRY. Anyway, they have so many funds coming out. I'm not saying anything bad about it, but I'm saying that to me, the lightning spread and the leverage plus income, I'd like to see how they're going to be different, or how they're going to differentiate. It's, I don't know. I kind of think the lightning spread will probably do better on total return. That's my opinion. Anyway, we'll see. It'll be interesting to see when it comes out. All right, what else you guys want to talk about? Let's go over here let's go to Stock Tools. We haven't checked out Stock Tools yet. StockTools.app/Max is my referral code. This is a good web app. Let's go to the income ETF analysis. And Let's just select all and see who did the best today. We know who it was. So let's just look really fast. See who did the second best. How's AMDY not on there? Well, maybe AMDY didn't load, or are we looking at, let's just do this. Let's just look at the Yield Max single stock funds, see which Yield Max single stock funds are up. Surely AMDY is on there, right? It was up 12%. I mean, it was up 9%. I mean, market data for Berkey's unavailable. Did that one get shut down or something? I never hear about that. And it always says unavailable. Maybe they changed the symbol. I bet they changed the symbol. Okay, there it is. Anyway, yeah. That's amazing right there. I'm surprised that AMDW did not outperform AMDY. In fact, I don't even believe that. Or AMDU, the one from Rex. I'm kind of surprised also. Maybe there isn't an AMDW yet. Anyway. All right. Well, a week's pretty dialed in. I mean, a day's pretty dialed in. Let's go back and look at the past week and try to get just a little bit bigger perspective. Yeah, there's AMD. I look at 35% in a week. Come on. I mean, that's amazing. It's been a good week for a lot of them. It has been a good week for a lot of them. Okay. Morrow, Hui. I know a lot of people are really loving HOOW right now and who just all the HOOs. All right, and let's go back and let's look over 6 months to kind of get a broader perspective. See what the really good ones are. To me, it's better to be good over 6 months than 1 month or 1 day. So better to be best over all of them. AMDY's been on all of them so far. Palty, look at this. Palty's a monster. TSMY up 70%. Don't do cover calls. You don't get any upside, right? Don't tell that to Jay Pestricelli. Don't tell that to... Now, to be fair, though, Coney is an example of what people are talking about when they just kind of say that. Because, I mean, the underlying was up 120% and they were only up 62%. That's not real. That's how covered calls used to work. But anyway, you could sort of buy just to see who beats the parent the most. That's, as you guys know, so I'm obsessed with beating the parent because I like value or I like to outperformance. I want, you know, so anyway, you have beating the parents, the ultimate. So here's all the differences. These are the ones that are beating the parent worse. And so Coney, which I was just giving a hard time to. Oh no, that's the one where the parents are up the most. I'm sorry. I was going to say, how did that make that list? Okay. So the ones that are doing best against the parent over the past month are Abney, AMZ, Misty, JPMO, or this over the past 6 months. Murney, of course, that's because it goes down. I mean, anyway, XOMO, PayPay, Aptly. Now let's look at the same list over the past week. All right, beating the parent, the inverses don't count. Carvani, look at that. Carvani, Murney, well, Murney doesn't count either. Boy, Tesla's had Tesla hasn't had a great week, but it hasn't had as bad of a week as Tesla, huh? All right. Anyway, go check that piece of software out. It's a good one. AMDW is up 6. It must not be on my, for whatever reason. Yeah, I mean, it was not on Rob's software. Rob, if you're watching, AMDW is not on here. He probably knows it, but let's just do this. Or if it didn't get sorted into the first list somehow, I'm sure it's there. Rob knows what he's doing. There it is, AMDW. Up 51% when the underline's up 43%. I'll turn this off. Man, that's amazing. I wish I could say I had it, but I have WPay. That's as close as I want to get to that. But I mean, it'll work, right? It'll darn sure work. I can't believe there's 20 of you guys here. That's the most people I've ever had. There was 19 this morning. Okay, so these shows are getting better or whatever, getting more popular, so that's good. But anyway, you guys put questions up here if you have them. If not, that's fine. I'll probably just let you guys go because I've been talking for, it seems like 2 hours because I had a half-hour live stream. Trying to think, was it really a half hour? I got on like at 3:05 and I finally, it's like 20 minutes where I talked to nobody before I finally figured it out. So many more ETFs are coming out before Christmas. Should be a profitable household. Yeah. Well, it'd be great to, with these people that, think about the people that are investors in YieldMax. I always figured it was just really Jay and Mike, but there's other people. I don't think it's, I always figured it was really just Jay and Mike, and they were just, but no. But one time Jay told me, they can't tell me it's private people, but no, there are other people that are from other companies involved and stuff. But think how lucky those sons of a guns are. Can you imagine? Hey guys, I got a business idea. We're going to sell covered calls, start an ETF company. We're going to sell covered calls on Tesla and pay people like 50, 70, 80%. And I mean, and then it takes off, and now it's, I mean, I wonder how much they could sell YieldMax for. And I bet you YieldMax gets sold. I guarantee you they're looking at selling it right now. Or I'm not selling, cashing out or whatever. Those guys aren't getting any younger. They made a lot of money. But YieldMax manages $20 billion. There's a ratio. I don't know what the ratio is, but we could look at other ETF companies that have sold, looked at what they manage and look at what they sold for and figure out, but it's a lot of money. It's a lot of money. I mean, lucky guys. Lucky guys. Okay. You don't like Grant shares ETFs, especially since the price. Yeah, XBTY is a problem. And so is TQQ. I'll agree with you. The price performance on some of them is less than impressive. I would definitely agree with you. And I'll even agree. I'll even say it's that I would put them behind Rex, but I'm like Granite shares curious. I didn't used to be, but I'll agree that probably, I don't know, agree, but I bet you most of you guys would agree that Rex has a really good thing going, especially if you want a little return. They have a good balance going. The Rex funds are the ones that end in 2 eyes, and they're incredible. But yeah, to each his own. We have a jillion of them, so you can. A lot of people hate YieldMax. That's fine. I get YieldMax, and I'll get all the other people hate Defiance. So I mean, it's fine. You teach his own. Because that, for those people, that's probably why Roundhill kind of got invented for YieldMax haters. I never really figured that out at first, but Roundhill had a good business model. Because remember what else they did is they went weekly, and that was a genius decision because it made them more popular. They had the market read right. They went weekly, and then the market had to follow them. So yeah, Roundhill's been an impressive story, and I bet those guys are trying to sell to private equity or something too. But I'm just saying, I wouldn't be surprised someday if people show up in Forbes 5 or 10 years, and the source of their wealth was a YieldMax investment. They'll sell that for multiple billions of dollars. I guarantee you. They'll sell YieldMax. Who knows what kind of liabilities they have, but they'll get multiple billions of dollars for it. So anyway, good for them. Let's check Elon Plus. Okay, let's check Elon real quick. Well, let's just check it here. We'll just check it this way, and then we'll check it some other way too. So Elon versus, I guess, Tesla, but Elon's was a long Tesla, short Ford, right? Yeah. So Elon looks a lot better than Tesla. So long Tesla, short Ford, or is it long? Yeah, that's right. It's long Tesla, short Ford. Doesn't pay a dividend, though. It's a growth fund. That's why I never really talk about that much. There's plenty of good funds out there I never talk about, like BTGD. It's not that I have anything against it. It's just QUp is another good one. QUp's a growth fund. The only reason I talk about it at all is because their option strategy is cool. But Anyway, so Elon, how else could we check them? I mean, how would let's check Elon on let's do this. Let's check Elon here. Let's do a better check. So is Elon's not even on this one because this is dividend stocks. Well, let's do, I was going to say we could check the max factor, but Elon's not on there because it's not, I don't know. I don't know. Is that the symbol, Musk? Really? Or is there really one called Musk? I typed in the wrong. Okay, so Musk is not a thing. Doesn't appear to be. Unless maybe it just recently started or something. Anyway. Yeah, I knew you liked Rex, and I think I talk with a lot of people that like Rex, and I don't have any Rex, but as soon as I saw what they were doing, I loved it because they're doing the yield max strategy. Synthetic's a better strategy. I say it every time. You don't need the stock. I don't want the stock. Don't have any use for the stock. Synthetics, so they do the synthetic, and when I saw they were doing the synthetic on half the portfolio, but then using margin at the same time. I think I told you guys, I think this one looks really good. So Musk is from Quantify. I just haven't heard about it yet. Maybe it's been filed for, but I'm into this kind of stuff though. Let me type prospectus and see if we can get there we go. Musk from Quantify. Marcus knows all. Oh, it's stacked. Okay. All right. So it's Tesla and NVIDIA together. Oh my gosh. So this pretty much covers a lot of stuff, but particularly covers full self-driving type stuff, right? Because you need NVIDIA and Tesla. I mean, that's the market they're going for, right? NVIDIA and Tesla, man, that's going to be a monster. I mean, depending on how the other ones do. Depending on how depends 100% on how the leverage underlines do. All right, would lower rates make leverage ETFs more profitable? I don't know. Let's think about that. Lower rates make leverage ETFs more profitable. I don't really understand why. Is it because you could get more on margin, or you would have a smaller margin payment? I don't know. As you know, I don't mess with leverage. You used to quite a bit, but yeah, I don't know. It's 100% Tesla and NVIDIA. Okay. I've said my one problem with lower rates will make volatility go down. Volatility going down will make these funds earn less. The people from Yield Max are arguing with me about it, but I've lived through it before. When interest rates go to zero, or as interest rates go lower, IV goes with it. VIX goes with it. They're 100% correlated for sure. So that's my main reason for not wanting like super low interest rates, because you can't make any money selling options. We're really in the perfect storm for option selling the past couple of years, because we've been in a condition where, three-way perfect storm. Because part of the deal with option selling is if you're smart, you use a synthetic, which means you have a lot of cash lying around. So that cash can get T-bill interest. So right now we have a condition where we can earn 4% more on T-bills, and volatility's jacked because interest rates are still jacked. But interest rates haven't gone up far enough to crash the market. They've come up far enough to make everything volatile and crazy, or to keep IV high. But it's a perfect storm for covered call funds. They probably won't always be this good. And that makes a good case for Salty and YQQQ. Or Salty and YQQQ are also the defense if a bad market comes, but you still want some income. Take a look at Lay's. Yeah, I've looked at Lay's before. I'm trying to think. Lay's is long. Was Lay's? Lay's is a stacked fund of NVIDIA and AMD, right? I think that's right. I think that's right. Let's go. NVIDIA and AMD. I was right about that one. I was right about that one. Well, so can you imagine how this one's doing? Holy cow. I mean, I just don't do single stocks. Like I'm saying, if there wasn't for things like WPay and blocks, and or YMAX, I would never have exposure to these. That's why I love or the SPY and stuff. I mean, but I would do these stacked ones. I don't know why they don't do a stacked one that's stacked 100% VIX and 100% SPX. And that's called something arbitrage, stat arbitrage, when you're long the SPY and long the VIX at the same time, or short the SPY and short the VIX at the same time. And you can set up a situation where you can make money if the market goes up or down. I mean, that's how you try to set it up. Anyway, I don't know why they don't have a fund like this. This is going to be an all or nothing. I mean, in other words, why don't they make a stacked fund that's 100% short NVIDIA and 100% long AMD or something? And they won't do that because no one, I mean, they won't do that. They won't do that. Anyway, but they do need a stacked fund that's VIX and SPY. I mean, pros do that all the time. You hear that all the time. A hedge fund will be long SPX synthetics or leaps or whatever. And then at the same time, there'll be also long VIX futures contracts. And there's a sweet spot in there. And they also wait for the VIX and the SPX to get out of alignment. It's a reversion to mean trade too, but that's called statistical arbitrage. I've always wanted to do that because it just sounds so cool. And I tried to kind of adapt it. I was long Microsoft and short Apple or vice versa back during 2022, and it worked out all right. I was trying to do something similar, but yeah, but I mean, but I don't know how to do it. It takes a more specialty to do it. But I would love for a fund to come out that does that trade, either long SPX and long VIX, or at other times short SPX and short VIX. You don't have any directional exposure, which is kind of what I like, because you're balanced. But anyway, all right, guys. Well, I've gone on long enough. If you have any more questions, I'd be glad to answer them. But okay, so Marcus is saying yes because it would lower margin. So yes. So I mean, it would make the business model more profitable. If your business model is to borrow money and try to pay these off before the market goes down, and some people are doing that, or they're trying to pay your margin down and turn it into an income machine or whatever. Yes, then Marcus, yeah, because it would lower margin requirements. So take a look at Lay's. We've already looked at that. It's amazing, Marcus. I have to beg IBKR every time I get adjusting. Okay. All right, guys. Well, thank you so much for being here. I appreciate each and every one of you guys. This was a record podcast. I've never had 20 people in at one time that I've noticed. I mean, when I have Jay or Mike Coe on, I've had like 40 or 50 people, but I've never had 20 people just on one of these afternoon ones. All right, guys. I'll see you in the morning, probably 9:30 my time, so probably 10 or 10:30 your time. And if you need to talk about anything, hit me up in Discord. Or if you have my number, hit me up, shoot me a text. All right. All right, guys. Thank you so much for being here. I appreciate you all. And I hope you have a wonderful